5 mistakes new NQ futures traders make. Most new traders don't fail because they're dumb or stupid. Most fail because they keep making these same mistakes over and over again. If you are an NQ trader, this will definitely hit home with you. Today I'm breaking down the top 5 mistakes that end up blowing accounts the fastest. I personally have done this, and I see this all over the internet. If you don't know who I am, I trade NQ momentum using the 40 range chart. If you're trading funded accounts and trying to pass these challenges, these rules are critical to you passing these accounts. Mistake number 1, you do not have a defined edge. You go into the markets and you see a green candle and you want to buy it. You see a red candle and you want to sell it. You got on YouTube last week and now you're the biggest and the baddest trader in the game. Do not do this. The breakout looks good, you jump in, and then it instantly pulls back on you. Now you're stopped out. Or you jump in a trade and now you don't trade with a stop loss. So now now you're just losing. One way to fix this is try to do 1 setup a day, max 2 losses in a day. You want to define your entry and you want to place your stops at a designated area and leave those stops. Do not move those stops. Have a very particular target that you're looking to aim for. If you cannot explain yourself clearly, it's not ready. It is not the setup for you. If you can't explain your setup in 3 sentences or less, that is not the setup for you, and you should wait for the next opportunity. Mistake number 2, you're oversizing. You're killing your accounts by oversizing. I literally go through this still to this day. I'm working on it, going to get better at it, but I'm human, okay? NQ moves really, really fast. One standard contract is $20 per point. So if you have a 100-point move, you're already $2,000 in the red. Stop, I repeat, stop trading NQ. Size down to the MNQ, and you can put up to 10 contracts, and it's a standard. And you can dollar cost average in or out so that you're basically saving your account from being blown immediately. New traders try to go big way too soon. You haven't even back tested your strategy. You haven't forward tested your strategy. You literally got on YouTube yesterday, saw a strategy, hopped on, and now you're trying to be that trader. Take a pause, take a breath, do your back test, do your forward test, collect your data, and then you can learn how to size in or size up based on your particular strategy. Really, to fix this, you really need to size down, risk 1 to 2% per trade, size down until you are consistent in this, and then you can size up, and that plays a part in your data. Focus on execution, not the dollar amount, and build your account. I have gotten a payout with Apex, and the way that I did it was I basically took these accounts, and my whole goal for the month was like, do not blow these accounts. So I ended up sizing down on these accounts, and when I sized down and I just traded regular, I ended up getting payouts. I got upwards of $15,000 from Apex. Mistake number 3, you move your stops. You're in a trade, you've collected your data, you did your forward testing, and now you're doing active trading in the markets. And now you get nervous. Your heart starts beating really fast, and you don't know what to do. Your hands are sweaty, your palms are sweaty. You just took a trade, you took another trade, and you know you're not supposed to do more than 1 to 2 trades a day. And now you're like, I gotta make back my money. I know, it sounds like I know this because I've done this. When it comes to trading, you need to put your stop, let it be that. And then when you're done for the day, be done for the day. Walk away, go for a walk, play with your kids, do house chores, do anything but look at the charts. Because if you're sitting behind the computer or you're looking at your phone, and if you trade from your phone, it's inevitable that you will want to place another trade. And a lot of these companies do not really offer trade managers, or they do, but it's like in the back end and you have to know a little bit of technology in order to make it work. So when your stops are placed, let that be your stops, because you've already went through the data and you know exactly what you want. So let that be that, and walk away after your risk tolerance is met. Mistake number 4, revenge trading. Revenge trading kills accounts. People lose their mortgage. They mortgage their houses. They lose their savings. They lose their livelihood behind revenge trading. That's why I believe that the prop firm industry is one of the best things that has ever happened to the trading industry. It allows for people like me and probably people like you looking at this video to participate in the market without losing the house per se. When you revenge trade, people aren't just revenge trading to get back their loss. Like, they're revenge trading to get back their loss and then some. And the reason I know this, again, is I have done this. I have stopped doing this in the recent times, but I have done this, and when I tell you, it plays a huge role on my mood for the rest of the day after I have done this. So I had to stop doing this for my family's sake and for my mental health. Revenge trading, it's as simple as just 2 to 3 trades max in a day, looking for the best setups and not every setup. So you're looking for maybe 1 to 2 good setups a day, and if you get that first trade as a winner, you walk away and you let that be that. And remember, professionals have these rules set up. Professionals have a rule of, like, I have a money goal for the day. Some professionals don't have money goals. They have rule goals. So I followed all my rules today, and I managed the way my rules told me to manage, and therefore it was a good day. They don't worry about the money amount because they know that their rules in return will bring them the money. So they just follow the rules. Mistake number 5. Ignoring context, right? So there are a lot of time frame traders. I used to be a time frame trader. I would look up the daily, and then I would go down to the 4 hour, the 1 hour, down all the way down until I got to the 1 minute. Looking at market structure from the daily all the way down to the 1 minute. The daily structure is usually, daily was my weekly bias, and then when I go down to the 4 hour, you get more intraday to weekly, and then the 1 hour was intraday, and 1 minute obviously was my entry. But don't get stuck just watching the 1 minute chart if you're a 1 minute trader or a lower time frame trader trading the NQ. I trade the range chart because I understand now that what I didn't know before was that the market is fractal. So what happens on the daily happens on the 1 hour. What happens on the 1 hour happens on the 1 minute. What happens on the 1 minute happens on every range chart that there is. It happens on Hakanashi charts too. It happens on bar candle charts. It happens on just candlestick charts too. Like, everything is fractal. Market moves up, market moves down. That's what the market does. So it doesn't matter what time frame you're watching. It matters the context that you have. I also use the COT report to look and determine what the market may do during the week. So if the COT report tells me that the market's going to be choppy, I want to play the reversals, or I want to play the pullbacks. If the COT report tells me that it's going to be a trending week, I want to just play momentum plays all the way up or all the way down. That's what I want to do. When it comes to this 5th mistake, what I've personally been through when it comes to the higher time frame and then going down to the lower time frames, as you're cycling down through these time frames, you start to see what you want to see. So what I would usually say to myself is like, hey, instead of going through daily 4 hour, 1 hour, 2 hour, 6 hour, blah 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 blah, so and so on, I would keep it to 3 time frames. So if I'm trading on the 1 minute, I want to trade the 1 minute. I want to trade the not trade. I want to enter on the 1 minute, but I want to look at structure on the 6 minute, and then I want my context to be on the hourly chart. Uh, Basically, if I see hourly structure from Friday and I'm trading Monday break down below a swing point, I want to look for shorts, and if it's breaking above, I want to look for longs on Monday. Um, but with that model, I found out that basically, market doesn't move because of what price is telling you. Market moves because of the volume that's in the market, the orders that are in the market. And now I'm more of an order flow type trader, and I see the market move more fluid in the direction that I'm choosing now more days. So in closing, trading isn't about finding the best indicator or eliminating all the mistakes, because you're gonna lose trades. Like, the best traders are the best losers. Most traders usually do not need a better strategy. They need better discipline. They need to be able to follow rules. They need to be able to control their emotion. And if you eliminate these mistakes, you're on a good path to keep going and to prosper. And if you trade NQ momentum, subscribe. I'll break down live my executions and my profit room strategies. Comment below which mistake you struggle with the most, because I know I struggle with risk the most. And I'll see you in the next session. Thank you.